With rising inflation, bank failures, and massive layoffs across multiple sectors, the future of the economy remains uncertain. It's no wonder the central banks have been getting prepared by stockpiling gold. At ITM Trading, we have spent over 27 years building a team of seasoned researchers and analysts who can help you prepare for any financial crisis. Our experts are ready to provide you with proven strategies to safeguard your wealth and assets in the event of an economic downturn or currency reset, which is frankly inevitable. Don't wait until it's too late. Schedule your free gold and silver strategy call by clicking on the link in the description below.
Welcome back to the Black Swan Capitalist channel. I'm your host, Vandel, with Versan Aljarrah. And today we have another special guest joining us again. That's Francis Hunt. Quick introduction. So Francis is a seasoned trader with over 30 years of experience trading his own capital on various markets and instruments. Unlike most educators in the trading space, Francis actually walks the walk and talks the talk using his passion for trading and relentless study of markets to develop his own Hunt Volatility Funnel HVF trading methodology. He is actually the founder and owner of the Market Sniper. Thank you, Francis. Glad you're here with us today again. I hope I got that right.
Last one. Really enjoyed it and glad to be back. And thank you for the introduction.
Did I get it right?
You nailed it. That's right.
All right. Well, thank you. Good to see you again.
On that point, the HVF, my main raison d'etre is the pursuit of what is the real truth on anything.
You're definitely a truth seeker for sure.
Yeah, a seeker. And I found there was a lot of dogma in traditional technical analysis, which continued to tie people up. And it became something where people create tools to sell. So eventually, if there's no gold, but lots of people convince people there's gold in certain things, they can sell picks and panning equipment to them to pan for this. And the fact that they're wasting their time and doing nothing productive is immaterial to them. They get to sell. And they can even create a narrative of fake finds. And technical analysis became indicator obsessed. I remember when I was a meta stock, we now have 1,000 indicators, 1,000 ways to waste time and lots of other things. So the HVF method was particularly designed to follow the money. It's in the charts. That's a truism. Patterns, structures give you, and volatility give you unique asymmetry opportunities. You have to be ready for those key moments where you can get a disproportionate move in your favor on a much tighter risk, yet still have a reasonable probability of that event occurring. How do you position so that you're only in the market at those very key moments when you can have that disproportionate gain that can justify leverage? You've got to earn your right to leverage by initially investing and using it very judiciously, because leverage kills most other people. In fact, it's a great tool for people that want to strip the masses. It encourages a gambling mentality. There's a whole dopamine and biological aspect that has to be contained. You have to be dispassionate. You have to agree contractually to where your entry point is, where your stop is and your target, and you have to walk from the market, whatever it's going to do, and let whatever happen. And until you're ready to actually do that, you're probably gambling. And most people are chasing things moving up, or they're going moving average this or that. I spend a lot of time debunking moving averages. There's going to be a lot of people that are going to be really hurt hearing me say that. It is literally the dead cow behind your 4x4 that you've pulled out of the river. And you're on the slippery clay slope, and the car's doing a bit of this, and the cow the rope is taut, and it's always going to be following you. It's not alive. It's not telling you the future. It's a dead cow, and it's being pulled behind you. And you are going to regularly cross directly behind each other, and it's not, oh my God, the planets have lined up. It is mathematics. The tow rope's name is mathematics. So I have to eliminate dogma. And we were talking about the constructs of religion and how they all came about. There's an unbelievable amount of dogma, and there's an unbelievable amount of belief. Whenever you believe something, it means something that you've not rationalized yourself into as an opening situation. Therefore, you cannot ever be rationalized out of it. It is something you were just given. It's Santa Claus for adults. It's Satoshi. It's whatever the case may be. There is no rational proof. It's hypothesis. Most things are hypothesis. Most things we say is on balance of probabilities. hence why you'll sometimes see I put OBP in tweets and people don't know what I'm saying. I will avoid and I stamp out the use of the word belief. It's one of our core principles. So sorry, a little bit of a sidebar, but I thought that would be interesting mini rant for your guys just to chew on while we get kicked off on the show.
Yeah.
No.
I saw your tweet the other day about telling people to stay away from the meme coins and focus more on real solutions, good trading options out there. But that's an example. People have too much leverage on things they don't have a clue about. And it's a gambling mentality, like you said.
Yeah.
Totally agree.
A meme token will entirely be a gambling mentality, which doesn't mean that they aren't going to do some spectacular stuff to keep people in the game, in the gambling mentality. The casino's got to switch its lights on. There's a reason casinos don't have windows, they don't have clocks, they have lots of bells, whistles, continual excitement, adrenal stimulus. These things are designed to keep you in the cave until you've emptied your wallet, and you pay. Every time you're getting entertainment and getting adrenal surges and rushes, they have set up a system to give you that and lose track of time, etc., and you pay for that experience. And I'm here to say you need to be, in terms of the markets, you need to be entirely pragmatic and you need to be going pre-agreed. And this actually taken us into the word prepare. It's everything you've decided you will do. And we talked a little bit about prepping and how when key moments. I've gone through mental simulations of people coming to fetch my gold and what the move is. And I've written contract with self, and I will still find it hard to stick to that. Are you going to hand it over? Are you going to register it as the first step before handing over it? We were discussing the significance of alchemy and religions and various other things. Anything you haven't pre-thought and game theoried and made mental commitments and then ideally written down, you're unlikely to adhere to when the emotions and the leverage and the pressure gets big. And we saw this with mask wearing, I'll say the word, where
Say it.
Took medical through a syringe in an inoculation type format. If you don't predetermine, we predetermined what was happening well before it was even part of the discussion. We expected it to happen. We predicted it. We warned others. We stood back and we knew what our response was to every aspect of that. That is deeply, deeply centering, because you become someone driven by principle who is studying to be better prepared for the future, the past. And many people say technical analysis is useless. You're looking in the rear view mirror while you're driving. Well, I'd rather know that I'm on a very rocky dirt road in windy mountains, or whether I'm in the fifth lane of an autobahn doing 200 kilometers per hour. That's actually useful information, and you do get it in the rear mirror. And alternative to that analogy, you actually get pattern structures which do give you future outcome events with quite high probability, and they definitely give you asymmetric reward. And that is where the hunt, which is me, the volatility funneling, which is the entry point in low periods of extreme low volatility, which usually are the primer and the precursory to a highly expansive event, give you. So even if you're wrong 50% of the time, but you're getting 6 to 1, you should be taking those trades. It's not about being right. It's about the entire process, what the outcome brings. And what happens is people get those right, but then they get bored and they gamble in the interim in those non-moments, and they give back a lot of what they do. So that's my whole journey, is trying to help people from doing destructive things. We are our own best and our own worst shepherd, if that makes sense.
It does. And real quick, I just want to add to that. So I think it's just amazing how that you already know this saying that show me the charts and I'll show you the news. So when you know technical analysis and use it in a proper manner, like how you teach at your company and the way you teach it to your students, I think you have a significantly unfair advantage.
Absolutely. And the mental posture that must go to it. In other words, a success is adherence to process, not making money. You can get positive enforcement for bad habits. You can actually make some money doing bad things. And I've done this. I made, a couple of £100,000 once on robbed coffee. And I said why I made this money, and it was the worst thing that ever happened to me. because I was over leveraged in terms of a money management period point of view. It came back, but I got the end outcome in spite of it. And I was so adrenally wired, and then nothing more, the simple good trades, that the bread and butter no longer excited me. It's kind of like I made out with Cindy Crawford, the supermodel, and now I looked at my wife as a poor old dumpy cleaner type, because, I'd just been spoilt by such largesse. And in actual fact, I sought to create that situation again many, many times, because I was biologically addicted to real money is when you make hundreds of thousands in a single trade. And you actually have to bring yourself down when you've won, and you have to talk yourself up. Your game is to manage your emotionality and adherence to process at a very flat level, not hyper, not super pumped, not amped. The guy who runs around high-fiving everybody in the trading floor is the guy who's about to lose his next trade quite substantially. The best and the longest standing guys are poker face. And inside you can be reasonably content, of course, and you can be sometimes feel a little bit, damn, that didn't quite work out. We're still human, but you want to aim from not expressing. I can literally, this is a joke, and I think a lot of these people watching are going to love this. I call this the telling your wife or girlfriend factor. You are at peak P&L and should shut up and close everything and rather go away for 2 weeks and stop trading. When you call your wife or significant other, let's say there's some ladies on the show and they have husbands, and say, look what I just did and made that trade. The minute you invite your partner in to see how smart you were, you're at peak. Look at this number I generated, look at that. That is an absolute top on your personal P&L call. That is second to none, because I know this because I've done it 3 or 4 times with different wives and girlfriends.
So you have the experience to speak on this.
Absolutely. And I've observed it in others as someone who's taught in an academy environment with physically people around, and also everything. And it's something I watch details. So I'm a detailed truth seeker for key things. And every time you do that. So by the way, once you invite her in, I'm assuming there'll still be a largely male audience. So I'll stay with the male gender, but I'm not excluding the lovely ladies that are trading the markets. Once you invite her in, the first time she asked, so how's it going? You're going to be properly pissed off, because it's not nearly as good as it was when you invited her in. And she's going, oh, so how are we doing with this? Can we decorate the bedroom now or refurb the house yet? And that's going to be, you're going to be crashing, and you're going to go, shut up, it's got nothing to do with you. Trading's my own pursuit. But you invited her in when you wanted to show off. So the ego is an indicator as well. And that's an ego indicator. When I call it the refer to your wife and show how smart you've been. And that's often as a result of leverage. People that tell me they've made too much money in too short a time, I just know it's a money management issue, and they're going to blow up soon. So yeah, it's another fascinating and fun analogy that'll entertain your audience, hopefully.
Definitely.
Awesome. A crucial topic that I really want to get your perspective on, and this affects each and every one of us, and that is the decision to raise the debt ceiling. And
by June 5th,
opinion, real quick, but whether a deal is reached or not, in my opinion, the outcome is always the same. It's the people who are going to ultimately pay for all the damages. But what are your thoughts on how this is going to unfold? What do you think is going to happen?
So that's a non-technical question, and I'm a technical specialist, but luckily I'm fascinated by markets, and I also consider myself a pretty decent macro and fundamentalist professional. So I speak out of an Austrian Mises hat and say, the only correct thing to do, and were I a politician, which I wouldn't last longer than a day, I'd either be shot or fired very quickly, as I've been out of most of my jobs. But I would absolutely say that was a complete sop, that they cut by 0.2%. That is not a cut at all. And in actual fact, all the weaponized industries against citizenry, such as the military industrial complex, actually went up. And the important thing to remember with something like the military industrial complex going up is that is statist spending. So that is government to business. The consumer actually right now, in my opinion, the general consumer is slowly getting wrecked, and some have already quickly got wrecked in terms of house pricing down. Interest rates hit a spike on the debt ceiling, by the way. Super high. You're getting in the States 7%. I heard yesterday. I don't stay up to date. There's people that'll be more current, but yesterday I saw a table, I don't know what it is today, of your fixed rate mortgage for the average American. You've got people that are trapped in homes that they can't refi, that eventually maybe a window period will end, or they can't sell because they wouldn't be able to afford to pay the payment in the new interest rate environment. So you have a lot of fake affordability that eventually gets washed out when someone structurally has to move. You lose a job and you're no longer to make a mortgage payment, you have to sell. You're a forced seller. The new buyer that is using debt has to pay the current fixed rate prices. He considers that in his price because Americans are payment focused, even on cars. And you end up with a massive contraction. Housing is going to contract. It is the second ATM apart from the stock market in America, and it's the first ATM in the United Kingdom and many other nations, Australia, for example, as well. So
when you say housing is going to contract, sorry,
Absolutely.
Francis.
in valuation are going to contract. Yes, indeed.
Okay.
So
Makes
valuations
sense.
are going to contract. So you're going to get negative equity situations. And that's going to be pretty hairy. So the debt ceiling, I would say, if for those that have the left versus right framing, which is absolutely the wrong framing, I call it the typical watches mainstream media framing, that was a victory for the Democrats. That's how they put it. It was essentially the McCarthy has bent over and taken one up the backside, as far as I'm concerned. But you know, the real cuts, the really seismic would be what Ron Paul presented. He was probably the only person that ever got into running for a presidency and had to do it as an independent candidate because he wouldn't be recognized and wasn't dragged into the main debates, that was not selected for potential election. And he would have removed all American troops offshore, brought everyone back, tried not to be this global cop influence. He would have cut deficits. He would have cut all of these spendings. So the Democrats got lots of this quango leftist spending. I'm sure there's more money going to, you know, the transgender societies and quangos and support and the various other immigration.
There is.
All forms of that. Military's gone up, which, as I say, is weaponization. It's AI is part of the weaponization against you. Machine learning is weaponization against you. They'll be able to copy you and me and make a talking head, and they could probably make a film of me murdering you two guys and arrest me later for it. You know, they have your voice, have your everything, that's all captured. I consider Zoom, they're scraping it. They popularize Zoom, politicians popularize it. They're probably scraping voice and everything else in it. And just to participate, I have to concede that these things are probably already happening. So it was a victory for statism. And it's an important sub-theme is that government is the primary economy now. This is already a communist state in that private expenditure is actually less, is getting ever less, and government expenditure is getting ever higher. And again, I refer you to the military-industrial complex, AI, which you need to expand your thinking of the military-industrial complex into including the crisis-industrial complex, the pharmaceutical-industrial complex, all of these things that have been weaponized used. So you essentially have a corporate-fascist industry that is in cahoots with government. In other words, an extension of government, maybe not by ownership structure directly, but clearly in cahoots. So these oligopolies and states are the big spenders. The consumer is not the big spender, which is why Amazon initially sold off. This is why you're getting a lot of consumers exposed, and it's squeezing SMEs and the middle classes immensely. And it's why I also warn in terms of direction, because the question was about debt ceiling, but where does this take us? This drama has passed, this little pantomime of theater now, but where is it taking you to? How does this go? Where does this go? Government over-expenditure, crowding out of the private economy is part of that. It's the destruction of the middle class, small businesses to the benefit, like as in the events of March 22, the benefits of the oligopolial classes that then get investment from BlackRock because they woke and they're doing the right kind of adverts, etc., and they get coerced into doing this. Otherwise, they get short sold or whatever the blackmail is being pulled. that gets them to be compliant on all of that. You're going to see more of the same, of all of the inversion, perversion, cultural wars, which is divisive. Its intention is divisive. I know many of you people watching will be, you know, sort of family-orientated conservatives. Do not give them their outrage either. It's also outrage marketing. You know, I regularly, and I'm guilty of this. I'll show, oh, look at the new scam they're pulling here on trans this, trans that, and you should be doing this. And you've got, you know, you've actually got men dressed up as women raping females in female change rooms. We don't have safety for our womankind anymore, and we should be outraged actually by that. But the whole Twitter outrage, and the try avoid that. They're harnessing your energy and you're giving it the thesis and the antithesis game that they want to create. Yeah, the old and the new. They brought this new force, which actually isn't that very well backed, but it's backed by corporations, money, and a handful of people that are spinners and ruling class types and parasites. And then we are the silent mass majority, and they create this and they get their synthesis to come out of that thesis and antithesis. So don't give too much energy into it.
Don't feed into it.
Yeah, okay. And this is actively on the ground fighting it. So that's the direction, and debt ceiling is taking us in that further that way. And it leads to, in my opinion, so you've also noticed farming, and I'll finish here. Farms are being bought in Holland, in America. They are going to right-size the food supply chain, and they've bifurcated the global chain. So they are entrenching inflation, and we are likely to get, in my personal view, looking forward, their game of total destruction of the middle classes, which is their actual synthesis outcome, is an interest rate spike, contrary to what many people expect. So inflation is going to remain stubbornly high, and actually just when people keep calling top and peak Fed pivot, they're going to get caught exactly the opposite way. They are doing everything. Food is going to remain stubbornly expensive because they're already curtailing the supply on the basis of green. So the watermelon communism is a manipulation to also maintain inflation that is going to cause strangulation interest rates, probably give you the dollar milkshake theory spike that Brent Johnson has spoken a lot about at some point before everything collapses, not because the dollar's sound money, but because the biggest nation will have some of the biggest deficits, and then we'll have the biggest spiky interest rates, and that'll cause relative valuations to go out of kilter. And then they go, oh, look, this financial system doesn't work. It's no longer fit for purpose. Hey, we've got this thing we've been testing and it's on the shelf, good to go. And here you come.
The blockchain. The CBDCs, yes. Now, as inflation rises, which I think it's going to continue to rise, that's a very good indicator that we're at the end cycle of the currency, correct?
Yes. So again, debt and money. Money is borrowed into existence. So a big market call that no one else has made, and very few are making even today, is that the debt market ended its bull period in the events of March 2020. When you got those abnormally low rates and that hypervaluation. There is absolute a preponderance and proliferation of over expenditure. You're actually buying the other side of other people's bad expenditure. They are throwing billions at Ukraine. They are throwing billions at these quangos that pursue, you know, gender equity and all the multitude of genders, et cetera, corporate culture wars. All of that money has been thrown in it, and you are buying that and saying, I'll have that asset. On the basis I'll be paid that super low interest rate. That has turned, and much less people now want to hold that asset, and that means that interest rate has to keep going up to hold the value. So we actually have a debt crisis, which is the dark side of the moon part of the currency crisis, because currency is borrowed into existence, and banks are the intermediators of the Fed that are giving out loans. You're not getting somebody else's savings. So most people understand that that is how the system is created. So we have proliferated too much money. There's too many dark ops where a lot of bad folks are doing things and getting little brown envelopes, and money is recycled. We can go through the FTX, the Ukraine, the whole thing. But there's many other, and there have always been. And the military industrial complex was the standard one. It was one of the dirtiest deals, arms dealers, and you had to be politically connected. You might remember Margaret Thatcher's son was at one point an arms dealer, and then occasionally working a few government overthrows in Africa, and et cetera, et cetera. So these are the manipulators, and these are the people that make extortionate amount of money, and they don't work any as hard as you, but they go and they meet right at the top and get things done on a handshake. So
Makes sense.
yeah, so that is why the debt markets turned, in our opinion, and you're going to have ever higher interest rates because nobody's going to want to hold the bonds. The inflation is going to remain stubbornly high, and that means you are guaranteed a net loss to a real inflation rate. Never mind the BLS statistic. So more and more people are waking up that things aren't truthful either. So what you get is they don't trust statistics. They don't trust that they're even breaking even on the debt, and they demand ever more. And the trend, it's also the perception of what's the trend for this. You had a capitulation in rates, which was a blow off in valuations. So it is the dot-com boom of debt occurred in March 2020, but nobody's realized it or discussing it. Everybody spotted the dot-com bloom. Why am I the only guy who's talking about the dot-com boom of the debt market? And this is
way ahead
headline for this video, because it absolutely. And they then created 6 or 7 trillion. People have no quantity understanding of how vast a number that is, and we haven't even got into the quadrillion derivative markets. It is absolutely huge. So that key turning point means never a debt owner be. And you get people, a lot of people I admire as well, sometimes say, well, occasionally George Gammon says, well, for this period, you're going to get a bit of upside on the debt markets if there's fear and all that. Never take along again. That dot-com boom came down, had a rally, fool's rally, smashed lower, came down, had another fool's rally, went down, and pet.com ended up bankrupt. Most of them got bankrupt. Who were the survivors? The chosen dark state who were introducing the technology in the first place. Amazon, your New World Order online retailer, Google, later to be joined by Facebook, and of course the hardware guys like Cisco that have enabled it, but they're almost the railway line. We're talking about the trains now. So all of these big fellas, Microsoft was already existing, but got involved and they had a boom. So all the criminal and weaponized dark state entities are the only real survivors. And if you aren't part of that, you don't get to survive, which is why we say the status tokens must be looked at if you intend to make money.
Definitely. And that's XRP, XLM, the ISO.
We're going to get into that in a second, but I would like to share something real quick. Yesterday, I had a conversation with my neighbor, and we were talking about the financial system. And I tried to warn her, I didn't give her too much gloom and doom. I did explain this in an analytical way. And she said that we're just going to kick it down the road. And when I told her that one day we're going to kick it down the road and it won't work, it's going to backfire on us, she started laughing at me, calling me a conspiracy theorist. And that's an example of how uninformed people are about what this means when you continue to print more money and have to raise interest rates as a result. Again, the people are the ones who are going to suffer the most. So right now we see that there are a lot of factors that are driving money out of traditional markets and into blockchain technology and these technologies that are building the infrastructure for this new system. What I wanted to know is, what are your thoughts on this Ripple lawsuit, and how does this tie into everything with institutional adoption and utility? Can you give us a little bit of information on that? What do you think? Just curious.
So in terms of people that manage these cycles, there can be something that they intend to use, but they don't want to have break cover till they are ready. And you can engineer a situation where you actually put the handbrake on that car for a while.
That's the Ripple lawsuit.
The back wheels are lighting up, but it ain't moving. And then suddenly the handbrake goes off and the power's at full revs and you're straight off the dyno through the wall and heading down the Autobahn at 300 k's per hour. And in essence, that's kind of, I think, there is no clarity at all. It's quite clear they aren't there to give clarity. It's quite simple. The question they need to answer, and they've had 5 years now to do it, maybe even more, is what's a security and what's not a security or a commodity? And quite simply, they've made absolutely zero progress that they're able to declare to us in terms of that, which means it's by intent. Because if your sole job in this entire industry is to determine what is what, zebra, you go to a zoo and it has a name tag and you see the appropriate animal behind the name tag. And they are incapable of naming the animal in the zoo. And there's only 2 or 3 animals. So you've got to say it is quite clearly, if you distill something down to its simple basic level, what do you think of the zookeeper who has 3 animals? I think we have 3 options: a commodity, a security. Someone will tell me the others. I don't even overfollow it. I just
A currency.
A currency. Okay.
Yeah.
You've got to put a label on it, and you've not been able to do that for 5 years. It's obfuscation is the word. It's intent, and that's why I was fortunate enough to have an SL55 back in the days when they came out, and you would light up those rear tires for a while, and then suddenly you would get traction and would lurch along there. I'd almost bump my head on the panoramic roof. Only I didn't even have the handbrake on. This XRP to me is that 55 with that Mr. Schmidt engine brusque type sound roaring, but the handbrake's on. So in essence, this is a eliminating engine that in terms of timing, it's just, okay, we hold, it's ready, bake, it's ready, and we just lift the gates, and bang, the dog's out of the gate, and he's running after that rabbit like you've never seen. So in essence, to me, it's obfuscation, because it's quite clear what you need to do. It's quite clear you have no intent of fulfilling that, and that means you're just a holding pen. And that's my simplified answer.
Thank you.
Yeah.
And if it was to destroy XRP, it's also quite clear that it's not intended to do that. So it's at a hold. It's putting it on hold rather than it's taking it out. So, and by the way, they could have, when Bitcoin first broke, they gave all this nonsense. People are buying AK-47s with it and all of this. They are the arms dealers. They spend cash. Cash is the biggest non-identifier. Blockchain is totally visible. And it was absolute rubbish. So it was just misinformation at the time, because they were trying to hold it back and pretend that statism didn't have an interest in this, and it was a bad thing that had organically come back that they weren't controlling. So it was misinformation. You've got to remember, everything is misinformation that is statism. Everything. It's designed to provoke an emotional response in every news item, and usually it's fear or concern. Yes. So they are a fear management product. They bundle fear in boxes, and they sell it to you, and you turn it on and they ram it into your eyes, ears, and brain. That's why it's called programming.
Yes. They tell you what to feel and what to think.
That they are in you, So, I mean, it's don't switch the TV off more and recognize that's an intended tactic. It's tactical. It's entirely tactical. So the question then becomes, and if you look at the Ripple Corporation, they've continued to work, continued to build the bridges. So behind the scenes, there's this wall of pressure. And when we look at the charts, which we'll get to when you guys are ready, I'm in no rush to do that. But when we look at the charts, the beautiful thing about it technically, and I will just earmark this note when we
let's do it actually,
is the second bull period where Bitcoin did a 69 after the previous bull at 20K, which is around 3.5x more. Ripple failed to even take out the $3.36 that it had made, and I think it traded just sub 190s. This is also my memory, 196 odd.
But it should have.
So but the gift that gives you. So this is what I talk about markets and technicals, is anything that you get given is both an opportunity and a gift, even when it feels like a kick in the balls. Because what it's actually done is set up a macro technical structure, which is far more promising now than the Bitcoin technical structure. And this is that held in potential energy. This is what rockets are, essentially. You put a slingshot, absolute shit ton of fuel, you light a match, and you create a closed cylinder. And you create the surge in pressure. And then you let a small gap open at the bottom, and the item gets propelled in the opposite direction to the gap. And that's a simplification in simple language of rocket. You're all rocket scientists now, in essence. And in essence, we will have a degree of that in that captured energy. It suddenly has to be repriced in. And markets hate uncertainty. It's almost better to have bad news than to have no news and uncertainty. Because if it gets priced in and the bad news is largely priced in, get the bad news out. Okay, everybody's accepted it. It's largely priced in. It falls a tiny bit more by some emotional reactors on the day. And then quickly it rebuilds its base and it says, okay, it's a forward discounting mechanism, the markets. So it says, right, what does the future hold? We had that setback. What does the future hold? When you have uncertainty that's intended and has now been hanging for years, it's actually worse than if you just got a bad result and you got a chance to get over it and move forward.
So it's building up.
Exactly.
In
So
other
this
words.
is a dam wall where you've had the floods can keep on coming and all the other rivers have dammed up, and now there's too much pressure on your wall. You get additional.
Yeah. So what are your charts? What are your charts indicating? Let's take a look at that, Francis. I know the audience would love to see what your indicators are telling you and what you think is going to happen. So maybe we could talk about a little price prediction, maybe short term and long term.
Absolutely.
Yeah.
Can you
this is exciting.
Chart share for me?
Yeah, let's do it.
Vendel, allow them to share the screen. Also, if we can discuss in a bit after XRP, a little bit of XLM as well. I remember last time we spoke about it, you said we were looking at XLM prices, that they were going to be astronomical, numbers that we couldn't imagine. And I believe that too. So might as well look at that as well. I believe very strongly that XRP and XLM are actually tied together in many ways.
Right.
They need each other.
Your on balance of probability assessment is that XRP and XLM are tied in many ways.
So we're looking at the XRP chart right here, right? Oh,
I'm correcting your use of the word believe.
Okay.
Actually, I'll show you guys something interesting just quickly before we leave it.
Yeah,
this is kind of, it's just landing on this chart. We were doing this. I was sharing this to the community. So we got long on gold. This is gold versus the euro. And I know this has nothing to do with crypto, but gold is real money. And we know the euro.
Indeed.
We have an example of a structure, and we started buying here on what we consider the relative low 2, and we have a target of 1931. And if you had done that, your first initial, just as a principle, because this was live and the guys can watch this, by the time you have the video out, it will have moved on. I don't know if it's going to work or not. They can all go, yeah, you're lost, I don't care. They can go, oh great, you won, you're awesome. Whatever they people, however they want to respond, they can respond. But this is a live trade example that our community members have. And this is a long, and this is a tactical long. We're macro long bulls gold. We've said it's going to 2.9 as its first leg on the dollars. But if you had entered there, your first stop is under the low 1.
Was it pure? Go ahead, Francis.
Yeah. Carry on. Ask your question.
Was it pure technical analysis that gave you, allowed you to make a prediction of where the price was going for gold?
Yes. So gold against the dollar, without going too deep into this, because I know you guys want to just look at XRP, but we do what we call 360-degree analysis. It's quite flattering. Someone started an academy talking about 360-degree analysis, one of our catchphrases. We looked at gold on the dollar. It's had a pullback to bounce on its capping descending grind line. I'd have to pull up the chart. Let's avoid doing that. And so we now think that it's had a little rest, and now it's probably going to have a reasonable day. We have been thinking that for 2 days now, hence why we were accumulating it. But we've chosen the euro to be even weaker. So we were buying at this relative low 2. So our expectation is that there is a consolidation. The last move is quite strong, impulsive. So we are continuation traders, that you've had a down leg, you've had a less large, but still considerable secondary impulse, and a following down leg, and that you're likely to make a third and maybe settle, and then you're going to break and run that 1931. Now, you guys watch this and see if we're right. I mean, your community and your watchers will go and see if we're right. Now, the key thing is we've manufactured initially what is a 4.2.1 to the entry. So I'm entered at that level, 1817. Now, what's happened, since we've made a pretty solid RL2, I get to tighten that stop to just under the RL2. So now it's an 8.87, and we haven't even triggered the pattern. We don't even know if we're going to get that pattern. It can still fail. It can roll over and fail. Anything can happen. We don't have belief systems about this, and it's against the euro. So we're expecting further weakness of the euro against the dollar as well. So we've chosen our currency, but this is available on a number of the platforms that we use in here. Now, if it goes over and rests, I will get a chance once it's made a third high over there to potentially put more on, because my risk management has now shortened. If I was happy to lose $1,000 there, I've now got that down to there. I've cut it in half. I've bought the right through an early entry to manage and maintain that loss at $1,000. That means after this 3 and it dips down, I'm buying again, or I wait until it breaks the 3, which we call a just-in-time entry. That means you don't sit and have carry cost either. So you can do either. And that also means if it turned and fell down, I wouldn't get put in the trade. I only get put in the trade after a confirmed 3 is made. We've had the pullback. In other words, the trade is self-confirming by taking out the compression in the volatility. So I'm giving you a mini lesson in HVF, and guys can go watch how it turns out. Volatility compression. Incorrectly, traditional technical analysis says there are two trends in process here, and the market will break one of these lines confirming the trend. I feel, in our opinion, correctly, we say the main trend's already been determined as long. This is a consolidation where you are getting compression on the volatility from both below and above in and around a key level of significance, and that once you are ready to leave that last level of truth for the next level of truth, which is usually determined by volume by price, various other key levels that you've made before, you will get an impulsive move, which will allow an asymmetric reward to a very tight risk. And what will then happen is, if that third happens, I can actually drag that, be in a position where I can drag that stop to wherever that 3 is. So just to draw that final third impulse, let's say it goes up here, pull back here, and then starts to drift up and getting ready to go. This money management stop can even be a profit lock before we've even broken. I can go here once it goes back up here, so that if the pattern fails and it goes down and the whole thing goes to crap, I'm actually still locking in some green. Once it breaks, we leave our stop there, because sometimes once you've broken, you get a return move, and many people snatch a 1:1 when there's a 1:10 in the making. So I've had the benefit as someone who's taught in physical academies, looking over what people think they're making and then running the P&L on their trades, dumping their actual trades and saying, but you closed here and you were long there. You made a 0.6. Oh, I thought I made 1:1. No, brokerage, you made a 0.6. And then that would have, and it ended up going where you told me it was going to go. You actually had a 3x. A 3 to risk 3 R's. And it's amazing what people actually mentally enrich into their mind that they've achieved, that they don't look at the auditing records in terms of what they actually achieved. So watch that one. I've given everybody the trade. I think that'll still be going when you guys release the content, because you normally get it out in a day or so. See 1931 on the gold euro runs, or whether the 1808, which would be my stop level, runs. There you go. You have something. And
so you're exercising good risk management.
The key to staying in the game, the first goal is to stay in the game. In poker, people get eliminated too fast, and they're gamblers, remember, and they go all in. We don't ever do that. We don't ever go all in. So but at the beginning, the rule is to stay in the game, and that is money management. Defense wins championships. Attack wins you games. Defense wins you the championships. In all games, if you think about football, American football, soccer, whatever you guys want to call it, great defenses. You've got to have a great defense. Okay, so the reason this particular mini version is interesting is because it's a mini version microcosm of what I'm about to show you when we go to XRP. So let's go to the XRP, which is what you wanted.
Okay, all right.
Here we go.
So what's it trading at today? What's about 50 cents?
Let's see. Yep. It's hanging out at
Something
50
like
cents.
Yeah. Now, the chart you might not like is this. And let's hold on. Excuse me while I just find my feature. Sorry, guys.
No, go ahead. Take your time, Francis. See, this is something I'm slowly getting involved in. The technical analysis, the charts. So mostly Versan and I are very macro focused, fundamental analysts, and we look at things from a large, but I see the advantages.
So the great thing about fundamentals and the failure of fundamentals is it's based on news and being updated with news. And in my understanding of the world and not being part of these special society, priestly classes, masonry, you name it, whatever, do you think you get the news?
No.
Or do you think any changes you get at a retail level after it's been fed to private clients, institutions, et cetera, people that lunch with the CEOs, et cetera. You have to determine that. I've always
Yes, you're right.
a cynic and a pessimist when it comes to that. And I'm a positive person. I have a good mindset. I enjoy my life. But let me tell you, I also don't tolerate BS. You get it last. You must consider yourself as the category of last. You're part of the sheep that are being herded. We are all bleaters in their eyes. You get it absolutely last, and it's often fadeable.
Definitely.
It means it can go the other way. Or the news feeds where FX Street or whatever are talking about it, it's long gone. Okay, I found the chart I want to show you.
You're absolutely right about that. Yeah. It's
so
always
trading news is a real bad plan. And I did this for a while because it was tempting, and it points to the gambling stock. Oh, it's Friday coming, by the way. And this Friday is interesting. We have a live trading day, by the way, if anyone wants to join us for it. There will be a link in our videos. It's non-farm payrolls day release. It's a data release, but we don't trade that news because we have no idea what it is. But I used to, when I was earlier in my trading career, say, I think it's going to be a high number or a low number and take a punt. And that's just pure gambling, because we eventually got to, okay, is there a technical structure that is indicating a direction? If we could get a technical motivation, we would do it, because the market, the hive mind of the market, and I use that word hive, especially given our discussion before this call, the hive mind of the market is got the big money, is the smarter money and the better informed money. So I watch what the technical analysis does. So here's your Ripple chart. Let's get on with it. Okay. And you might see similarities to the gold euro, which is why you're getting a small version. Let all your viewers see how I do on the gold euro. I don't know if I'm going to win. I'm talking about the future here, and they'll have more information when the video goes out than I know now about what the price is. But essentially, you've got the same thing here, only on a much bigger time frame. I'm on a fortnight chart there, that 2W, 2 weeks.
So it's consolidating? It's just sitting?
It's been in an extended and prolonged by its exclusion from the last bull market. So, and what was the trend that took you into this 3 going on 6 year now? Because that kind of was the 2017 high, but then 2018, the dawn of 2018, that's the December high.
Almost $4 it hit.
That's right. I got a slightly lower number. I got 3 something, but it's maybe I've got a different exchange. But essentially you've got 218 to mid 23. I mean, it's going to be June soon, guys. We're 31st of May. It's June tomorrow. So by the time it's June. So
surpass its all-time high. We haven't even done that yet.
Correct. But the bigger, and this is the upside of the gift that you're getting by failing when others made new highs, is you now have an ever longer, larger pattern that projects geometry that you wouldn't have had you made a marginally higher high here and traded $4.10. So this is, in essence, it's not a trend war on the big time frames. On the 40 time frame, this is a consolidation of a major bull move that brought you in, which points to continuation from the previous trend, which also amazingly had very similar big first impulse, second impulse, low, resty, third impulse, trade the breakout, boom, you're long there, and you would have been in at 0.00, probably 8 or 9, 8/10 of a cent. 8/10 of a cent, even by today's standards, that's more than a 50x at 50 cents. You're talking plus 20% on that. So you're talking probably closer to 60 times you would be up. Never mind what you were when you traded the peak $3 odd high. Let's establish that high actually, because I think we had different numbers. Don't want to confuse. I had 331 on Bitstamp. which
Okay.
has nice long history. So that's why I'm using it. It's not the most high volume. So actually what you are looking at, my Ripple friends, is you're at the basing. Now I just showed you what we call the relative low to entry. That is an early entry strategy that we've done on gold, euro. You are at that same point that I just illustrated on a different market on a smaller time frame structure. So I gave you a microcosm of the structure of Ripple that will play out faster and sooner. You can see how we do. And I don't know how the outcome. It could be terrible. It could be stopped out. That's fine. It happens. I'm not defined by a single trade. And the strategy isn't defined by a single trade. But if you watch that go 1931, you will take seriously of what I'm going to tell you about this structure, and you have much more time for this one, because this one's RL2 is taking longer because it's all on 2 weeks. That we were on a 2-hour time frame on the gold euro.
Big difference.
But
Definitely.
the bigger the pattern, the bigger the geometry and the bigger the move, but the longer and more patience required. So right now in my community, DCA every month, Ripple. You know, every penny you're not spending, accumulate this guy. Accumulate. There's no leverage involved in that. Accumulated. What are we getting? Low volatility. Low volatility generally, not 100% exclusively, but generally is an exceedingly bullish price behavior attribute. In other words, you move up from low volatility. Look how this squeezed tighter. Let me change color. I made an absolute Picasso of masterpiece here. People are going to be paying for this NFT millions, I think, at the end of the show. You've got a super low vol period here illustrated in the blue. What then happened? The bull market came. Oops, another little squeezy Japanese, as we sometimes say, super low volatility in there. How did that turn out for you? Boom chakalak. So now you have the single biggest in the history of XRP, the token, volatility squeeze, and you have already completed your first impulse. You have completed your full second up and down second impulse, and you're at the final low grounding period, waiting for a subtle move to the upside and a minor drift, which could be very minor. Sometimes it's like that, and it just goes. You get a run and go, which we call Bitcoin the first cup gold nugget, because you have 5 cups and the guy's hidden the gold nugget and you've got to guess one, and you guess right first time. Why? Because it didn't have much of a third down leg, because it had such a large down leg on the March 20 events. That was the second down leg, this one. And Ripple has had quite a bit of that too. There's a real capitulation in here. People just got totally bummed out by this lawsuit. You actually have a descending triangle on that top there, and it smashed through that low. And often the harder you wear a downside on the two, the lesser, because all the panic money is out of Ripple now. It's left with the insiders that know, and people who do great technical analysis with HVF method, and you guys. Of course.
Well, I have a quick question for you, Francis.
All the scared money's out. All the people who are sick and tired of waiting about lawsuits and impatience and all of this. You've got to have if you're an XRP guy and you're still in the mix here, you're starting to develop the patience of gold metals and silver guys, you know, who wait decades. So they eventually get their rewards, and they get them and some. So this is an incredibly low vol, upward grinding. That's going to have a drift to the upside. It might have a very small rest. It might have quite a prolonged rest, and then go super quiet to boring. Sometimes you get what we call funneling, hence why we talk about the volatility funnel. This is like your protein shake maker. Again, most of your audience is male. Sorry to the ladies, but if you lie it down, it's a constriction, big at the top, and then it gets squeezed into something that can fit in your bottleneck, that is your water bottle, and you make a protein shake. This is where we are at, and you're at the funneling point. When you get funneling, it's super boring. And the key thing is everybody is interested in a market that has pumpamentals. If I go into Twitter, everyone's talking about what stock do you think?
Oh, on Twitter?
Yeah, right now, what stock's being discussed?
I really don't.
You know what? I don't even pay.
I'm trading artificial intelligence.
NVIDIA.
Yes, it's all AI and NVIDIA. And
yeah.
That's the one. Why? Because it has momentum. and it was running. Everybody, it's like the dog that chases cars. And if the car stops, it's like it loses interest, it doesn't know what to do, and someone gets out. The man on the platform running after trains, you wait for the next one and you make sure you're in the right place. I actually did a very simple video where I say, you know, I watch a certain point. I catch the same train every day. I establish a post where a door always stops. So I'm saying to you, commit to do certain things and observe. Engage markets at specific points. This is not an always in game. If you always in, even in blackjack, you lose because the odds are in the house's favor.
You're right about that, Francis, but I have two questions real quick. So with your experience working with technical analysis and doing so many successful trades over the years, so based on the chart you have showing us, the first question is, what is your price prediction based on this very consolidation period that's going on, this slight volatility where it's just kind of sitting, going up and down, it's not doing too much movement, taking into account the previous all-time highs that we never surpassed? So what's your price prediction when it is ready to slingshot? Like, what targets do you have in mind that are completely realistic based on your technical analysis? Like, what are you thinking? Because I've heard a lot of people, technical analysts saying $7, $23 to $30. I've heard these numbers and figures being thrown around. So what do you think? That's the first question.
A realistic price.
Second thing is, what would be the catalyst for that?
So I am a seller at $16.77.
Interesting.
And maybe ask me how's my methodology done so far? Okay, well, it has a very short history. It's not an equity. Apart from being an exceptional methodology, and I would say that because I'm the originator of that, but you can talk to members of my community. In fact, I had on who is quite senior inside XRP, and he swears we had a little inside chat, didn't want to record it or anything like that, in our community, just for our community. And I can tell you that the one thing I never asked him to say, I just had a chat. He said, I will sell only on the HVF target. He said, every time I've held for longer or thought it will go higher, I've always lost and watched money run out. It's the best thing I know. I mean, he's a guy who sat in the room with me in London 10 years ago. He's been a community member for, I think, I met him again in Canary Wharf, etc. He was with NEM and now he's with XRP. He was in retail. He's an accountant. You're now talking about a senior person that is telling us about kind of conversations that central bankers have with employees, and he's in charge of actually bringing that in. So,
is that conservative figure, or is that kind of a little?
Let's see how we did. Let the past tell you how we did. So when it was down here,
I know your track record. Phenomenal.
The last point you would have got in here is 0.9 cents. And we are actually buyers at the RL2. We do early entries. So everywhere between 0.5, which is half of 0.5 cent, half of 1 cent, sorry, right the way to 0.9 cents, you would have been your buy zone in here. You got out 159. So that was 15.9 cents. That's where you would have closed. However, I hurry to mention, you then went straight into your next continuation pattern, which I've not drawn. That is that one. So you would have not sat through the consolidation. So remember, efficiency of capital use is very important. Other things were going up at that time whilst this was consolidating. So you get your capital back to use. What actually ended up happening is you had a consolidation here. Ripple was quite early to run in 17.
Yeah.
Then you had a consolidation here, and then it broke again. So you would have got out. You could have been sitting in Ethereum, for example, or an other, and then it broke again. So you would have, and I hadn't drawn the smaller time frames. I was just showing you the macro. We're on a big time frame chart. This is the macro. That gives you another target. That's over there. So you would have got back in in and around these areas here, so at about 23, so you left some money on the table because you got out at 16, you would have got in at around 23, and you would have run it up to, this is a log scale chart as well. It's quite important I mention this because big time frames, you should use log scale. Just a quick delogging, that's how the chart looks. It's flat as a pancake, that history in comparison. So percentage based is critical. So you would have got back in on 23. You've left that little move from that purple line to when you're back on the table. You would have then ridden that all the way up to 78 cents.
So what's the time frame do you think that we could reach a figure between $10 to $16 per XRP? Because based on the prolonged amount of time that we've been just sitting, consolidating, it's been, you know, years now.
The bigger the consolidation, the bigger the move, but also when you have bigger moves, there is an inherent likelihood of bigger time frames. But let me just give you some context. This is very much like war. So I was a soldier through conscription. It's 99.9% pure boredom and waiting around and 0.1% pure chaos. And that's kind of how HVF method structures work. When it's going real fast. So if you look at this, from December 13 till 17, you sat for 4 years going up and down and constricting and tightening. 4 years of actually not much good news, occasional pump here, for example, that would have kept you hearty, only to be disappointed by making a new low, and then a minor drift, and then real low, boring. Remember, boring good. Don't chase the moving thing in video, chase the thing that's squeezing, because that's how you get to be in before the news that it's, oh, AI is the season. You don't chase a pump with a stop a million miles back down there. You're going to lose your shirt unless you've done sizing. And then what do you gain to the top side? It might be close to the top. If you don't have a target, an entry and a stop, and they don't equal high R's gain to low R's risk, it's not a trade. It's not a trade. It's a gamble. So you had 4 years, and then in the space of, I'll go with a different color here, in the space of that amount of time, you went from half of a cent, 2.05 or 2.09 if you're getting it at the last moment, all the way up to a technical high there that was in and around, let me get a proper measure there for you, a technical high point of 37 cents. So if you got in at half a cent, you've made 37 times 2. 70. That's the extremity. You wouldn't have got out at the high. Let's say you got out somewhere in the middle where we would have gone back in again, 24. Let's say you just took the target, 15.7. You got in at 0.5. You've made 30, 32, 31.4 times your money, getting out at our target. And you've been doing other things with your money. You aren't sitting in this box doing nothing like a holder. You're showing up for the party and you're buggering off when it's over and you're going up to the next party.
So that was a 4-year time span right there.
A 4-year time span was over in 3 candles on a 2-week candle. You're talking 6 weeks and you were done on 4 years, 52 times 4.
And now how long?
Weeks.
And how long has it been now since our last pump? I think it was 2017.
About the same thing.
You're
we're around the corner.
Structure. No, you're a bigger structure. It's
bigger.
It's not the same because it goes from 18. So I'll swap the colors around.
18.
And it's 1st of January 18. It's death of December 17. You haven't even made your 3rd impulse yet, but I think you're about to start. And you're still here. And I think we'll probably go a little further. So I might need to drag this chart a little bit to buy us some more real estate here for the study. So, I mean, I hope your XRP guys are enjoying this because we're doing, I don't know anyone else.
This is fantastic, Francis. This is great.
Oh, they're gonna love this.
So we're almost at 6 years now.
They're gonna be very
doing
grateful.
nothing, right? We're about 6 years doing nothing, just sitting and being dragged down.
The biggest squeeze you've ever had.
Because of the lawsuit.
And it could still be I think you're going to start during this year, you're going to start your up leg and possibly even it depends how fast. So, I can't tell you gradients of things.
Of course.
We get a lot out of HVF method, more than any other trading strategy. I know we get interim targets, when it's going to rest, second interims, first and full targets. And we even know when you're going to get overperformance. For example, I simply said you would sell here, but being the first and largest of its era, we would have had a methodology for holding positions open, 25% of the position open for the additional move. And we have a methodology for that. But that's what I teach in my courses. People can find out if they want to know more. And they can go to the Market Sniper and book a call. But the key point is, so there's a lot that I can't explain in 1 hour session with you.
Of course, yeah.
We've got the biggest commitment to proper education, first class audio, first class PowerPoint slides, and everything, all in a custom area. So we take teaching properly, seriously. But my opinion is that what I see coming next is an upward move somewhere around here-ish, could go a little bit higher.
So a little past $1.
And then maybe
what it looks
rest.
like.
It depends how far down. Sometimes, as I've said, you can get the first cup gold nugget things. Things are getting too hot. The pressure's building. You get just a short technical little dip back, and then it's off like a sprinter. It's out the blocks. The guy's looking like he's pulling that gun, and he's already jumped and he's false started. You can get that. So the time frames are the second half of 2023 into the first half of 2024. I think the third impulse is gone, and you could even already be ready for break. But someone else could have a different opinion and say it could happen a lot quicker. We could go quite quickly here. We could have a small break and we could do that. And someone else might have a slow opinion and say, no, 2025 is the year. We're going to go slowly up, slowly down, maybe a little bit higher. And then there's going to be a long period of funneling and then we break.
Do you think the lawsuit would be a catalyst? But the charts would be moving first before the lawsuit news comes out.
Insiders will all be jumping on just in time at the relative 2 or the third, the break point.
Go ahead. You'll see the charts before. You'll see the charts move before the news comes out.
Either side of XRP, I'm strangling that thing. I've got tripwires. That thing moves and I know about it. It's mission impossible now for it. It can't do squat. If it drops it's Tom Cruise. If it drops a drop of sweat on that floor, all my alerts are going. Never mind flexing or hitting into one of my laser beams. So we're watching it like hawks now. This is the key thing. Snipers actually, so small, interesting narrative. Why are we snipers? I'm not a gun freak. So in world wars, and it's ironic, I talk on the military and the industrial complex, and I use a conflict thing. I became fascinated by the Vietnam War, the tunnel rats, and then snipering. The average number of rounds expended versus actually a fatality, an intended fatality, in World War II was 250,000 rounds of lead thrown for every single person that was terminated by a round that achieved its objective. But a pretty grim topic, I know. In Vietnam, that went to 450,000. So you had automatic weapons and you had jungle. And then you had a military industrial complex that just said blanket bomb, mow down, all of this. That actually means the bulk of the rounds fired are absolutely futile. They make a bunch of noise for a nanosecond, and a bunch of lead gets stuck in a tree somewhere in the ground. That's the productivity of your military industrial complex. That 1 in 450,000 of the rounds you buy is actually doing anything. Let's put it in inverted commas productivity. Then you get the specialist force that is a sniper. Do you know what the conversion rate for snipers were?
No.
So a sniper, 1.3. 1.3 rounds fired for every fatality. So literally these guys, if they pull the trigger, it's not only a certain shot. In their mind, it's splitting his eyeballs. So they've got the dot within the dot within the dot. And they're allowing for wind either side. It'll maybe just be a little bit to the left or the right, but it's a headshot. So you don't shoot until you have exceedingly high probability in your favor, whilst other guys will go rat-a-tat-tat, Uzi's in the jungle.
Which is what your methodology exercises and applies.
to have great conversion and big R's. The other parallels are we shoot big rounds so that we get big gains. So we manage and have a big loss on a small amount of size, and we get a very high number of R's. So I will lose $1,000 on a single R, but I'll be trading 20 R's sometimes, 30 R's. Most people are trading sub one. They think they're trading one, they're trading sub one. When you look at their P&Ls and do the audit on what they've actually, when they actually close the trade, etc. And often it's ad hoc. It's always a bad day. The markets are down. Let me just close. Well, you took a 0.4 on your winning trades. And this is our focus in terms of trading. Leverage should be very rarely used, but when you use it strongly, powerful, and change the course of a war.
Agreed.
Take a general out. And this is in the analysis we're doing here. So we are getting to the business.
I love it.
We're getting to the business end here of XRP, but we need a rally. And then we need a little bit of calming, but I can't tell you how much it goes. And then we're going to go. And then, so people think I just throw out clickbait. It is a clickbaity YouTube that we did this morning, 33x. No, it's not that number just because I'm trying to be clever and occultic or anything. If you get in and around the 50 cents levels and you go to 16.7, you are roughly doing 33 times your money. $16.5. And I'm looking at the 50, 52. So if you're averaging in up and you average 52 cents and you bought at 50, 51, 50s, you've just been dumping everything net in there, and then you bought up to 54 and you've averaged 52 and you go to 16.5, you've made 33 times your money. You're actually going to make a touch more. And we will have overperformance for 25% of our position, which is a special methodology, not part of this discussion. People want to find out more, they can book a call if they like what we do. But
the market
sniper.
sniper.
Just the base entry level of why we say what we say, and 16.7. And for those that think, yeah, that's a big number, you're calling funky shit there, I don't see it. You're talking to the people that called single digit oil when no one else was discussing it. You're talking to the people that called the collapse of the euro Swiss franc long before the Greek crisis occurred. The news follows. I went away on holiday in December and my trade started pouring cash on me. And then we came into January, we came into February and March, and then the early pigs and Greek crisis of 2010 started. And then the news and the theme came. And then the March 20 events came. But we were calling short oil all of 2019, the second half. We repeated it. We stood on stages in front of other people and said, you've never seen this before. It's never been in, not for 3 decades. You've never seen the likes of what's coming. And we short cruise liner companies as well as oil companies, and we don't know why, and pipeline companies.
Yeah, your price predictions have been on point historically. So your targets have been reached.
That's a great thing. But
I'd love to, people, I'm very wary of people that think, oh, are they just geniuses? You can do it too. You just need the tool that I'm giving everybody who's joining our community. They're doing it. I actually have very little time to search for trades. My best Top Gun HVF guys are searching for trades, and I'm going, that's a 9 out of 10. That's a 6 out of 10. That's the reason why. They learn, we bring it, and we trade community trades, a lot of them. And my best webinar presenters are pulling some of the best trades out for the community. I stand on other people's work in terms of many of the things I spot and I later talk about. But we get everyone in our community in first, and now we talk. Now, I can't tell you this token, but there's a token that's going to do 60 that will outperform this one. I can't tell you. It's a community and they paid for it. But there's one that's going to do 60 in our opinion. And that's think it must have status ties to it as well. But you're not going to fall poor if you do 33. And I would say this is our second best. So you're doing just great. And if you want to find out what that is, you can do a non-farm payrolls. It's $197.
You can book a call.
You book a call, jump on. And as I say, I don't want to sound too salesy. So it's only for those of like-minded who like what they do, and I don't want to abuse your guys' amazing platform, but I love what we do and we're all passionate. And if you understand the methodology and the approach of what we are attempting to help people build wealth in reset times, I am trading the things that will imprison us to take the money to buy more freedom for myself and my community members. That is my sole goal in life right now. We are living in extra normal, abnormal times where you are watching the slave management system being lowered like a cage over you. But
Indeed.
if you are well-resourced and you have multiple options, you are in a better position than if you are Joe Schmo, one citizenship, one something, relying on one job. You could be fired. That's a private job or it's government or whatever. You're going to have very few choices. You're going to have one CBDC wallet with one limit on it. We're discussing in our community some of the reset stuff. So we're the 3 logos, the market sniper, which is the HVF method, the crypto sniper, which is specific to the crypto market, and then the reset sniper. There's so much preparation people can do. And let me tell you, it sounds like black pill morbidity. No, it's awesome. The minute you start taking action and preparing on anything, you feel more prepared, you feel liberated. Just the process of taking action is amazing. And there's so much action people can take. Anyway, the good news.
Go ahead, Francis.
No, I've monologued too long.
No, go ahead. I want to hear the good news.
The good news for XRP holders, in my opinion, is that they will see in the so people have to realize something. This is a fortnightly chart. If people come back in a month's time and say, it's not done $16.7 yet, you're wrong. They're going to be totally wrong. You could see here, for example, just an example. You might have thought here, that's it, it's breaking because it took out that high. And it's actually a long time before it actually broke. If you count the number of 2-week candles, you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, times that by 2 weeks, that's 28 weeks. You're looking at more than half a year, 6 months difference between when you thought it was breaking. And if I was watching that at the time, I would have said, looks like we could be breaking, guys. And you know what the guy would have said? You're an idiot, you're wrong, your prediction is garbage. Look at that, it's come back, it never happened. I bought it because of you, I've lost money. Because you didn't know stop loss.
And then you end up right after some time.
And then you end up right, but it's 6 months later. And you have to still come to avoid missing the party because they close and lock the door. You still have to come a little bit earlier. And then you still have to stand around and talk
That's
to people.
the key. Get in early.
It doesn't come out and the drinks don't come
Francis,
out. Yeah,
I have a question as well. I want to talk a little bit about XLM. I know we were going to look at those charts, but maybe that's the last one we can look at. But XRP and XLM, I know they have very different origins and primary objectives, but I see that there are some potential areas where their technologies somewhat intersect. Do you see that, or what do you think about that?
So I will tell you where I'm competent and I'll tell you where I'm incompetent.
Sure.
Technically assessing the merits and demerits of XLM versus XRP will take me into an area where I'll make a fool of myself. I can repeat to you what someone who I believe is better informed has said, and I listened without opinion of whether he's accurate or not. And that was our insight in XRP. And he specifically said XLM came later and in his opinion is a better technology, but it's kind of a Betamax and a VHS thing. Yeah, the Betamax might have been the better player, but VHS got the movies, and that's why it proliferated. So it's also about who the deals you do. Also, an anecdote that was heard in that very interesting interview that only my private community unfortunately got. I'm sorry, there's no YouTube coming. You won't hear it. It's content for our community only. Is that he said that certain players said if certain nations, so let's say we were talking, this is all very hypothetical. Let's say we were talking about the Middle East. Certain Middle Eastern nations said if we were XRP or if they were XRP, we would take XLM. And if they are XLM, we'll take XRP. In other words, there is a already discussion where they are seen as highly similar and both achieving very similar objectives. And due to the desire to have variance, if you say rum and Coca-Cola, I say rum and Pepsi-Cola, just because I don't want to be you. But they're both sugar, they both look brown, they're both sweet, they both go in, and we're both drinking it for the same purpose. Does it make sense? So those are the anecdotes I have for you. So it seems to me that you might get Ripple as, say, a guess, numbers out of the air, just dropping into my head, no science at all. 70% market capture, and that there will be a black sheep option person that will say, everyone else is XRP. This is slightly newer. They're maybe going to ask a little bit less money. They're doing the same thing. I'll take an XLM. So, Vandal might be Nike and Versan is Adidas. Just because you don't want to both show up in Nike gear to the gym. So I have a feeling that there's going to be an element of that. And interestingly, technically, nothing on the charts undermines that supposition. So it's a working model. It's an on balance of probability assessment of these things. And there's going to be people who will comment in here and they're saying, no ways can they compete. This does this and the protocol that, and very much more technically capable. I'm just saying those are the anecdotes I've been given.
Okay.
Yes.
My level of competence, I'm out of my level of competence in terms of meriting the efficiency, the speed, the number of transactions per second, why one won't integrate well with certain systems, or etc. That's for smarter technocrats than myself.
So essentially then, well, while their technologies do differ, but there is got to be some sort of potential of interaction or integration in specific areas, like stable coins, maybe. If they are classified as stable coins, I can certainly see how that can unfold.
100%. And I would expect you to have a better opinion than me on the interoperability out of those two tokens. The only, I'm not sure I've got a great XLM chart straight off, but I'm using the market cap. This is a bad wick, so I would ignore this. Apologies, that's in the chart. Just ignore that. It's some schizo bad data. But you can see the similar structure. What I would say is I would start with XRP out of preference, because this feels tiny bit, it's very low vol, it's doing all the same things, a little bit further behind. It took a little bit longer behind. I would say it's behind in gestation and needs to, while XRP has already had quite an extended period off its low, building this, what we call a relative low 2 versus what we call the relative low 1. This seems to have a bit more time there. So I think you're going to have a little bit of a Litecoin versus Bitcoin here, where Litecoin might track Bitcoin but is behind. Sometimes actually it's been the other way around, so maybe that's not the best analogy. But one truck and trailer, a little bit of truck and trailer. One's probably going to follow the other, and I think Lumen will probably track XRP. And one in every 4 statist organization or whatever might choose to be different and go to sign up with Lumen. Don't forget, its market cap is about 1/10 when I checked, last checked. So if we just go to coin market cap.
Have you heard of XDC? XDC? Okay, well, I think you should take a look at it, Francis, when you get some time. So they have a very low supply in comparison to XLM and XRP, but yet extremely powerful technology.
Agreed.
It's called XDC.
This is my temptation. So I'll give you a general statement on what you just said, because I will be caught out and I will be saying no to a lot of people on new tokens. Do you remember the .com boom?
Yes.
I don't know how salient it was for you and whether you were watching markets at those points.
We were young.
We touched on this. There was boo.com, bridal.com, and they all nothing. They were just a bunch of business plans that got overfunded, ran ridiculous market caps, and then sizzled to nothing and went bankrupt. And realized, selling bridal dresses online, not such a great idea. There's not such margins on it. And, delivery and logistics, all of this. And Amazon now does most of the things. So I'm assessing that crypto is going to go through this huge field of .coms and get consolidated into a nifty 50. This tends to happen in equity markets.
I agree.
You have the Magnificent Seven. I think someone wrote an article, it was Hartnett, on the social medias. I mean, I could start a social media now. It's not going to get any traction. It's not going to have any scale. It's not supported by Dark State. Apart from my mum and my handful of mates, who's going to be on it? I could scream about it every YouTube I do. I'm not going to proliferate. You need scale. You've got to remember, Facebook came through the intelligence services universities of Harvard and Yale, where it was proliferated and given virality and all of these things to gain scale. And then everybody was inviting their friends and had designed the super catchy contagion. It's very hard to scale.
The same thing with Google. They got funding by the CIA.
Correct. Absolutely. So everything, you're spot on, and you guys are far awaker than most people of your age. And I can say to you, I sense that you have to play status tokens, and until something has shown it can maintain a high market cap and be in the top 15, top 10, consistently. I mean, you've had in the top 10, you had Crow, for example, you know, crypto.coin, which was sponsoring every UFC, crypto.com. Where's it now? I don't even know. You've had lots of fast flyers that have shot into the top 10 and fallen out. Where's Ethereum Classic today? You know, should I be caring? Should I be watching?
It's all bullshit.
To do. The real leaders, what you get is an index. Most fund managers don't even beat an index. This is an important financial discovery, because indexes are self-eliminating. As you go down, they reduce their holding of you, and as new money's coming in, they're buying the new leaders. So you are putting your wealth behind success and not holding losers. That's a great investment strategy. That's what an index does. That's why indexes became so popular.
Yeah.
Got low cost, and a robot bought whatever went up and trimmed whatever went down. So you keep backing the leaders. And we have a nifty 50, a magnificent 7 culture. Most of the things are status. So they slowly emerge out. So you want to buy the ones that climb because they will have further to climb. Many people refused Apple investments, although the Israelis were getting their head up on zero hedge, I think in 2009, 10, or whenever it was, and they kept buying it. And it kept going higher. Next thing you know, people going, I can't buy this. This is ridiculous valuations. And it went to be $1 trillion market cap company.
People always say, oh, market cap this, market cap that. But the thing is, it's a psychological metric. The market cap can significantly, substantially grow out of nowhere once the market matures. The market cap can just be brought in as the funds come in, correct?
Yeah.
Compared to the trillions of
Look at Amazon in the past, Google, Microsoft.
Individual equities, never mind entire industries, which are multiple trillions.
Exactly, yes.
Are all small. It's much better to be in the winners and the early runners. We always take our best pattern and the first early runners. The early runners always run longer, harder. Waiting, oh, I'll get the last guy. He's got a turn to go. He often pumps and fizzles very quickly and it's over. He was never good enough. And it's only during that period where even the shit flies, he gets a little bit of a bid and then everyone gives up hope. You want your early runners, you want your long runners, you want your biggest setups. And to me, the status tokens, the one thing you can't say about XRP, it's been in the top 10 forever.
Yeah, not to mention all the big companies out there and financial institutions backing it or trying to get some regulation in it.
100%. I think XLM is 1/10. That's what brought us to this particular thing. Stellar, 2.4 billion. And XRP, 2.26 billion. So we're talking roughly a 10th, maybe even an 11th, you can argue, or a 12th. So I think the scale move for XLM will be longer, but it's a bit like trading silver versus gold. You spend much more time on your twiddling your thumbs as well. It's better to have a mix of a solid earlier mover. So I would say XRP is our favorite, and I'd say they're very similar. So we are climbing into our Tron and chosen an XRP over XLM because the actual geometry, let me do a guess of how many times. You've got to understand the 33 times we haven't completed the pattern. So it's an estimation. So it's not wrong if it does 30, and it's not when we haven't been stupid if it does 35. We're guessing roughly where its midpoint and its geometry ends. But if I just look at this, I have to guess around which level is it consolidating. Where's the midpoint? Because we project from the midpoint of the volatility. We don't have the third impulse, which is often the most accurate one. So I would see for XLM, a guess would be 168 billion.
Wow.
Well, I still think we're in the early stages
But it could be a lot lower slung than that. It could be down here, and then it's 108 billion. That's quite a difference, So to ask me for a number is quite a difficult thing to do. But we find that they are disproportionately probable for the R's they offer. They must be taken. So even if you're going to be 5 times wrong in a row before you win, if it's 100 R's to 1 R, you should be taking that wrong trade every time it's offered to you. The probability is 20% because the multiple is higher. So that's where that's our mathematics. That's our financial mathematics. And maths is your friend. unlike emotions and momentum chasing. Those aren't your friends. That's casino. So that's the take on XLM. And as I say, we've got another token that is going, in our opinion, higher, and it's all in the top 15 odd tokens. So I've always focused. So a lot of people who've pursued skullduggery things. We've had, crypto banter. They pushed small tokens that they were taking positions and dumping on people while they're pumping them. I find that absolutely amoral.
It is immoral.
People that got, taking money off people on YouTube that never returned it and were gambling on FTX, were in the crypto.
Yeah, it's horrible.
And their channels flew past ours. You've got to have a morality and an integrity. We focus at liquidity. The move will make you the money. If you're in illiquid shitcoins, no matter how amazing their tech is, the amount of people that are going to change the world and have got a far more superior text narrative, I've heard it countless times. We were offered Bitcoin to do soft interviews on our crypto channel for CEOs launching things. We've stayed out of promoting any form of crypto, and many of them don't exist anymore on nothing tokens. And that's where you take your audience if you sell out. So we're here for the long term, and we know what we do. We implement HVF method, and we cast technical opinions on the direction, and with view to high reward to low risk trading. That's our game, and we stick to it. And we will never make money by dumping something on anyone, because we're never in illiquid anything, not stocks,
Amen.
not fundamentals. And if you retain your integrity, you have a long career. These others I've seen flash and boom, and many of them flew past us on subscriber numbers, and they were monetizing and they were pumping, and they did famously. But then you realize you're dealing with charlatans. So I'd rather not trade integrity.
Well, Francis, I really, really appreciate you taking the time to show us those charts, go over XRP and XLM, and give us your perspective on the debt ceiling and what's happening.
Thank you.
But it looks like Versan's computer is about to die. So we're going to have to wrap it up.
He's running out of
It was on 100% when we started, I think it's just I got so many apps open.
Yeah. So what's the asset to hold? The digital currency or the fiat currency? And I would say neither. You will hold the digital currency because you'll need it, and we will be trading and holding it generally. But this is a digitization of everything world, and I think you should hold physical assets.
I agree.
Bear in mind, they know I will come to that conclusion, and they have a plan for me for having that. But you're going to see property wealth taxes go up. You're going to see a lot of people on an interest rate spike washed out of their properties. Then there's going to be a much smaller group that are in properties. They're going to weaponize those that are no longer in properties against those that manage to hold on because they own their properties outright. They're going to then vote for taxes on these people. They're going to make it harder for any form of private ownership and idealism. I will own gold. I will look to own properties. I will not be in the Western access countries where the Bolshevik movement is going to be at its cultural worst. So I'm afraid for all Commonwealth nations and North America, including Australia and New Zealand. I'm suggesting moving. This is very reset. There's so much detail I could give you, but I'm wary of how much time that should be. People need to diversify out into physical things that you can hold, because then they have to send a man with a gun. That's not necessarily a scenario that won't happen, but they might force you to register that you own these things first. You've got to decide what your actions will do. And I'm saying always have integrity to people of integrity. But when people are weaponized against you, differentiate between morality and legality. If they can write a law that says that you are forced to register your gold, I have to determine whether that's in my best interest personally and family.
Yeah, immoral or not.
I could be a lawbreaker. I'm not saying I will. I'm not saying I won't. But it's a decision that if you haven't game theoried and thought through, you will not be ready. And typically people comply.
Yes.
When caught suddenly, and I stop you and I'm wearing a uniform and you're in your car and I say, put your hands on the wheel, you comply. So the point of the matter is, are you in the head, written down, contract with self, paired for all the eventualities of overreaching totalitarianism?
Yeah, they think just
everything.
They think just because something's legal means it's moral.
Well,
yes.
the good news is we're on the right path. Right.
Well, again, Francis, Versan, I think we'll wrap it up here.
Yep.
Thank you so much, Francis. Good chatting with you every time. Glad we had this conversation, and we're going to do this again. And we'll get into deeper discussions.
Yeah, people can go to themarketsniper.com to engage with us, book a call. We insist on talking to everyone first. There are current community members that take the calls. We don't have a sales force. You join if you want. We have 14 days money back. There's a live trading day occurring this Friday. You can attend that for $197, an hour and a half on traditional markets, a short break, and then an hour and a half on cryptos again, where we are at, cross the weeds. I take questions. And as I say, click the links, go to the call, visit the site, or just follow the YouTube for a while on The Crypto Sniper or The Market Sniper.
Amen.
Perfect. Amen. Well, Francis, we'll talk soon, okay?
All the best.
Thanks.
Have a great weekend.
All right, brother. You
Bye-bye.
too.